And that was Donna Diamond. We'll look at that serious problem. Joining me now is Karl Deeter of the Irish Mortgage Brokers. Karl, ESRI is saying perhaps 35,000 in a worst-case scenario next year might face default on their mortgages. Do you get a sense that that is actually the reality on the ground?
Well, we're certainly seeing a lot of mortgages not being paid. The people that can afford to pay are actually paying quicker than they used to. The problem, I guess, is that we've got all these policies in place that are actually putting off the information from coming through. Things such as the bank recapitalisation, which gave people a 12-month moratorium, the new code of conduct on mortgage arrears, which the financial regulator brought out in February, that also gives people a stay. So what's happening basically is part of the solution is realising you have a problem, and what we're doing in a credit sense is not really acknowledging that. We're putting it off until tomorrow, and we actually don't have the information we need. Again, it would be like setting out across the sea with no map, no directions, no timeline, no weather forecast, and expecting to reach the right place.
We kind of know who's on that boat, don't we, in many ways? It's sort of young families who get on the property ladder quite late and who obviously risk losing their jobs. I mean, it seems to be a very specific group at risk.
It tends to be the people who took out mortgages. They're aged 25 to 40. They are very much the engine in any economy. And what happens is negative equity, which the report talks about of itself, isn't so much an issue as when it's joined with a cash flow problem. Then it becomes a big issue, and you saw that in what that lady mentioned, that suddenly they were on one wage. Well, what if they were on no wage? And that becomes a huge problem. Experian in the USA did a survey of 24 million mortgages. They're kind of like the credit bureau over there, and they found that there was 588,000 strategic defaulters. These are people who actually have good jobs, can afford to pay, and they're just looking at the situation and saying, this doesn't make sense to me, so I'm going to go from 100% repayments to 0 repayments. And if you look at that, that's almost 2% of mortgage holders in the USA are defaulting on purpose, not because they can't.
And throw in there also the personal debts people have in other regards, maybe cars or holidays or whatever, credit cards, and then rising interest rates. I mean, this starts to look extremely dangerous very quickly.
Yeah, basically there is a lot of uncertainty out there. The VIX index is still very high. Gold hit over $1,000.40 today, which is a huge landmark for it. And there's uncertainty there. Royal Bank of Australia increased their rates today by 25 basis points. Interest rates are going to rise. And really what's happened is that so far we've been saved by the interest rate environment of the ECB. Certainly if we weren't in there, we would be sitting in a very different situation.
Now, looking at the bank's attitude, they seem to have, with the help of the regulator, with MABs, the debt services people, taking a much softer line, it seems, helping out, trying to communicate with these mortgage holders. Is that the way you see it?
It is, but I think one of the problems is that the solutions that they find are ones that ultimately keep the person on the hook for the full amount. They're not looking at things like moving paper, which is where you can sell your mortgage. They're not looking at things such as short sales. And I spoke, to the IBF earlier about these things, and they hadn't heard of any examples of it. They are doing as much as they can to make the situation tenable for the people in it, but they're not actually finding a real-world solution, and really what they're hoping on is that the economy gets better.
What about a NAMA for the little person, for the person who faces real problems with their mortgage? Some way the government could help do that?
I guess it goes back to the expression, you owe the bank 100 million, it's the bank's problem. You owe them less than that, it's very much your problem. I don't think we're going to see something like that. They are exercising a lot of forbearance, so they're allowing people to roll up interest and do things that essentially put it off. But again, are we going to see employment suddenly uptick to where all these people have jobs? Are we going to see the swamped supply side suddenly resolve itself? And I don't see how it's going to happen. It's a pretty bad situation. Basically, only half of the houses in this country are carrying a mortgage. So if you're one of the people that have low to no debt and you're in a secure job, you're going to be fine. But if you're one of the people on the opposite end of that spectrum who have a high amount of debt and you've lost your job, you're going to get crucified.
Karl Deeter, thanks for joining us. And it obviously, as you say, all depends on the future of the economy.